What's up guys, Remit here with another video, financial statement analysis. We're going to be continuing the financial statement analysis videos with the German materials companies, and we're going to be doing episode 24, and we're going to be looking at the company Symrise. So let's check the performance. So definitely we're in the green, which is awesome. Let's just quickly check how long it's been available. So about 9 years, almost 500%. So if you invested in its at its inception, you would have made about 5 times your investment, which is pretty decent, I would say. Out of all of the companies, out of all the episodes we've made, so it's 20. This is number 24. So this is by far the best performance we've seen, which is pretty good. A pretty good start. Let's go into the investment. May have made about 5. I made a 5% return on investment. I'm going to keep it there, of course, but it's only £1, so I wouldn't really be making a difference. Market cap is 16.52 billion, so it's straight off the bat, it's a large cap company. PE ratio 53. So right now it's expensive. I wouldn't advise investing right now because probably everyone has realized it's a good investment and it's based on its performance. So they've probably all jumped in and made the P ratio go quite high. So I wouldn't advise investing right now. Or if you were to invest, I would advise investing a little bit right now just to track the performance, and then when it goes down, just dollar cost average. That way you can make a bit more. You can overall your investment will be at a much more decent price. You would be buying the stock at a much more decent price overall if you dollar cost averaged. Anyway, back to the revenue, 3.52 billion. Let's just check the market cap again. So I think the revenue for the current financial year. Yeah, the revenue figure I think is pretty decent compared to its market cap. But let's look at a more solid figure of the company's value. I would say it's the total assets. Okay, so compared to its assets of 5.994 billion, having a revenue figure of almost 4 billion is quite amazing, because that means the return, just the net turnover, or return on capital employed, or return on assets, is like almost 80%, 90%, which is pretty sick. Dividend yield 0.82%, so not great. I'll probably say that's one of the worst we've seen. But then again, dividend yield can be sacrificed if the profit margins are high. So, and if you're looking to make money on capital gains, earnings per share, I think we've done, no, 2.2 euros. So it's pretty bad, 2.2 euros, considering market price is 125. That's why I highlighted the P ratio being quite high, because earnings per share is pretty rubbish. Anyway, that's down to the profit margin. So judging by the earnings per share being low, we can already tell that the profit margin is not going to be very high. But then we'll see. Beta is really good. It's like almost half of the market average, which is pretty good. So profit margins, as we said, 8.72%, which is not bad. It's one of the best actually we've seen so far. So I think German materials companies generally don't return much on when it comes to net income. But anyway, continuing to the balance sheet, debt to asset ratio is really high, 61%. It's not the worst. We've seen worse. I think we saw 80%, 84%. I think was the last one we done, or maybe the previous one before that. But 61% is not the best, but it's not the worst. So going on to the cash flow statement. Nope. Yeah. Cool. So 2020, a lot of a pattern we've seen it also, just to highlight, is that the current financial year, any of the statements, any of the top 3 statements, cash flow statement, the income statement, the balance sheet, they all seem to be missing the current financial year, the statements for the current financial year, which is not great. It doesn't really, it's not impressive for first time investors if they're looking for something to invest in. If they're looking for information, they can't really invest without it. Especially serious investors. So missing out on providing the financial statements for the current financial year is not a good look. Anyway, back to the figures. Positive 279 million for 2020, positive 166 million, 2018 positive 50 million. So straight off the bat, we are doing really, really well. Like this company, I would say, is the best we've seen so far. Excluding the last one we done, because that one was pretty good. But overall, I think this one has the highest number of positive metrics that we've seen so far. So I would definitely recommend this over any of the ones we've looked at so far. It is still mid cap, it's not large cap, so it's a bit more risky. But 499 million is not too small it's not so small that the risk level is the same as that of like a penny stock or something. But definitely I would say I would keep this as part of a diversified portfolio, not necessarily have a major stake, unless you're a really, really experienced investor, you know what you're doing. Yeah, thank you guys for watching. See you in the next one.